Welcome back. Taken in stride, high yields, low prices, and a hopeful outlook make an enticing entry point for municipal bond investors. Allspring Global Investments Municipal Bond Fund Portfolio Manager Nick Venditti joins me. And Nick, municipal bonds, munis, they don't always capture the headlines, but they have been outperforming. We talked about this over the break here. They have been outperforming bonds, which have just been performing dismally this year. When I say bonds, I mean treasury bonds.
Yeah, they've been outperforming almost everything, it turns out. On a scale of 1 to Ryan Reynolds, muni bonds are looking awfully sexy, certainly on a relative basis year to date, and probably on a go-forward basis, given some of the realities we still are facing from a Fed, from a geopolitical world that we're currently living in.
And we know that municipal bonds, they have different flavors, characteristics, a lot of them backed by income streams from their local governments or wherever it may be. Specifically, what kind of flavors are you looking at here that might be better suited to investors, depending on their circumstances?
Yeah, I think there are a lot of opportunities in it's a huge market, right? 60,000 plus issuers across the country. And by virtue of that, you have a lot of diversification, a lot of options to go find alpha. Look, in a world where everyone is concerned about inflation, you have munis that, to some degree at least, are inflation proof. You know this if you own a house, right? When your house price appreciates, the county assessor is there with a new tax bill very quickly. When your house price depreciates, it takes a lot longer for that
kind of like gas prices.
That's right. They tend to be much stickier to the upside than they are the downside. And by virtue of that, muni credit looks good now and will likely look good into the future.
All right, so we're talking about credit here. It is Fed Day, so I got to ask you about the Fed. Expectations are for a 75 basis point rate hike, but are these higher, just let's step back here from the 30-mile above the earth view. Are these higher rates hurting some of the local governments, or as you said, can they just pass these on?
Yeah, I think not yet, but ultimately it will. And the reason it will is because governments are, to some degree, businesses, right? They employ a lot of people. And to the extent that their employment costs go up, so do their pension costs, so do the costs of operating these cities. In addition to that, healthcare in this country is largely financed by munis, and we all know kind of the anecdotes about how expensive it is in this world to find doctors, to find nurses, and that could, over time, add a little bit of a weight to some of these credits.
Well, what you were talking about reminded me just now about 10 years ago, Meredith Whitney stuck her neck out, and she forecast a failure of municipal bonds that was going to be structural. That did not materialize. I'm not trying to pick on Meredith Whitney here, but there are some times in history when there have been fears that municipal governments could default, even if they're backed by income streams. What are the expectations of the economy and now supporting that view or not?
Yeah, I do think that investors need to be a little more careful in the municipal bond space than they had been in the past. Look, the reality is that for a long time, people looked at munis as the sleep easy at night asset class, that there was no risk because, frankly, interest rates always went down and credits never defaulted. And credits aren't going to default at any meaningful rate. But we are facing kind of unprecedented times. We are facing municipalities with unfunded pension liabilities that are enormous. We are facing wage pressure. And so, again, I'm by no means Meredith Whitney, but I do think that credit risk is real. And so investors in this space need to be comfortable that their investment managers are tearing apart these issuers from the bottom up.
All right, and along those lines, I'll just give you the floor here. We got quick time for one more. What do you want to talk about in terms of investments here? If you had 60 seconds, what'd you do?
I'd buy munis. Yeah? Look, I am bullish on municipal bonds in here. I'm bullish on an absolute basis because yields are so much higher. Look, I can go out into the world today and buy bonds inside of 10 years that yield in excess of 4%. You do the tax equivalent yield on a 4%, and that gets you above 6.5, close to 7. Most investors I know would happily clip 7% today, tomorrow, and frankly, every day until the end of time. And if you pair that with the fact that it gets pretty difficult to expect 7% equity returns over the next 3-6 months, given the realities we're facing. I'm talking about a low volatility asset class. I'm talking about limited duration with almost zero default rates. munis look like a pretty sexy place to be.
They might be giving Ryan Reynolds something for his money. Oh my God, I totally messed it up. But I really appreciate you stopping by here, Nick. You made municipal bonds interesting for me and our audience here. It's something that doesn't always happen. We're going to have to leave it right there.